फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई, आग से बचाए।
Welcome back. It's time to take the queries that have already started flooding in. Cheryl and I are going to have a tough time getting as many of them asked. I would like to remind our experts to keep their answers as short as possible. Also, if you're tuning in from your homes and you'd like to send us a message, you can take the number that is flashing on the screen, save it and send it a WhatsApp text to us and we'll take your query. Let me take the first question coming in from Sandeep from Noida, and this one's for you. Vijay, this is a long-term query for you. Bajaj Consumer, for the long term, he's got 200 shares at levels of 298. Would you suggest that he should hold on to his investment?
Yes, because the stock is sticking around 200 beginning. And it is, once it consolidates, I think that this can definitely go up to maybe 350 and above. So definitely hold.
Okay, Vijay, this one also is for you, and this one is coming from Soumitra. He wants to know about NOCIL Chemicals. Do you track this counter? He's saying that he's holding a significant quantity which he's purchased at 400 rupees per share, and he's saying that he personally believes that the future of this company, the company has a strong future. So he wants to know what's your view on it. NOCIL Chemicals, do you track it?
This company has done well, especially in the last year. But any company has to substantiate the stock price with the earnings, and the stock is trading at a price to earning of 66.3 with a book value of 78. So the book value as well as the PE is quite stretched. I would say that he can probably book around here and wait for lower levels. Although the stock can definitely go up to maybe around 950 or maybe around 1000, but yes, the price to earning is definitely stretched. Get into low PE companies, which would definitely save you a lot of your money if at all the market tanks.
Okay, this one is from Stephen Austin from Saudi Arabia, and he's saying he's a long-term investor. He's holding IDFC First Bank, about 15,500 shares that he's purchased at 49.5 rupees per share. He wants to know at what price can he average. Kunal, you've been pretty upbeat, I believe, on IDFC First Bank. At what price can Stephen look to actually average this counter?
See, I think current levels could be good enough levels where you can look to average. Many reasons for that. The fall getting arrested for the stock, banking index or the banking stocks are making a comeback for themselves. And if that signal persists for the sector overall, then you would see many of the beleaguered mid-cap banking names. They would also try and form a bottom, and there should be demand which should come back into this territory. So purely on that basis, I would expect IDFC First Bank and many of the other mid-cap banking names like Bandhan, etc. I think these stocks can also try and bottom out. So if you're holding it from higher levels, I would suggest that you can start averaging at current levels.
Okay, this one is coming in from Prashant from Bangalore. He's saying he's planning to buy Infosys from the levels of 1300. He's believing that there will be some sort of a correction, but that never happened in the last 4 months. So he's asking what is the best price that he can look at to enter into Infosys. Kunal, a lot of investors, I think it's not only for Infosys but other stocks as well, where you wait for a correction in order to enter, you never get that. So at what price should Prashant look to enter Infosys?
Well, absolutely. I think, there are times when you have to just about, enter into the stock and then wait for the stock to try and give you those consolidations or corrections. But there are times when the consolidation corrections don't come, and the wait keeps on getting much more elongated. I think same is the case with many of these large cap IT names. But then what has changed as a texture for this expiry or this series for the IT stocks is a less amount of rollovers as compared to the previous many expiries, and specifically for names like Infosys, which probably brings in a case that maybe the IT stocks could take a bit of a backseat. And you also have large cap other names like Reliance and banking names, etc., which are participating. So the major part of the weight could which was there for the IT stocks, that could be lifted by other sectors. I think if that happens, you should see many of these large cap IT names going through a corrective mode. So I think since you waited enough, I would suggest wait for maybe another 100 rupees on the downside. 1620, 100 should be a good level where you can look to start accumulating Infosys.
All right, there is some issue with Alex's feed. He will be back shortly, but till then, let me take this query from Sunil. He's written to us from Muscat. He's saying about 10 years ago, he bought about 1,000 shares of Vinati Organics at a price of 56 rupees per share. He wants to know whether he should look to book profits or continue to hold on for further gains. He's saying he can continue to hold on to Vinati Organics for the next 5 years if the future is bright. Vijay, do you believe Vinati Organics' future is bright for the next 5 years? It makes sense for Sunil to hold on, or should he book profits?
Well, I think that he has made substantial profits on his investments. And again, I would say that markets are on the top, and probably we might see market heading further, a few hundred points on Nifty. But yes, the price of the stock has to be substantiated with the earnings. Again, Vinati Organics is trading at about 66 and a half of price to earning, which is pretty high. So I think that when a stock is at 12 times of book value, the price, the PE is very high. I would recommend that keep on booking profits, get into stocks which are low on price to earning, which are high earning companies, low debt companies or zero debt companies. These would really give you a big fillip in your portfolio. So I would say that you can go and buy a Steel Authority or a Hindustan Copper or an NMDC. These companies are trading at 4-5, even a Jindal Steel and Power, which is trading at about 5 price to earning, or a Maithan Alloys, So these companies have great earnings. So get into companies which have great earnings. Although Vinati is a fantastic company, but yes, as of now, according to the basics of my understanding of the markets, the price to earning is expensive, and one should keep on booking profits as well.
All right. In fact, quite a few names that Vijay has just suggested that you might want to take note of. If you've got a notepad and a pen, you should do that. This next one's for you as well, Vijay. We've got Gomati, who's invested as much as 5 lakh in PSU stocks. Now, she hasn't mentioned which ones these are, but over 5 years, that value is eroded and it's now standing at 4 lakhs. Of course, I don't think that she's accounted for the dividend yield, which is generally high for these stocks. But would you suggest that she should now include some other private names, some of the names perhaps that you've suggested?
PSU stocks are having a great promise even now. And yes, if you adjust the dividend yield, I think that she would not be at a loss. So I think that there are great metal stocks available. Metals, I see still a rally for the next few years. Apart from that, yes, there are companies which you can nibble into. I think that shipping companies should do well. So Shipping Corporation of India is also good. Container Corporation of India is really good. And of course, I would like to mention here that public sector banks, companies like Bank of India, companies like even PNB, I think that, and Canara Bank and Bank of Baroda, they offer great promise. If somebody is buying for a 5-year perspective, I think that these stocks can be potential multi-baggers. And they are trading at a fairly low price to earning, and, the valuations are quite suppressed. So I think that, Canara Bank, Bank India, Bank of Baroda, these are great companies to nibble into in these times. So these have not shown any upside up till now. So I think that PSU still should do well over the next 4 or 5 years to be conservative.
Okay, this one is from Wimbla George and this one is for you, Kunal. She's saying that she would like to buy about 500 shares of Happiest Minds. She wants to know should she buy at the current levels or wait for some correction around 1200 odd levels. Kunal, what's your view on Happiest Minds? Should Wimbla start nibbling in already or wait for some correction?
There are two parts to it. One, that whether the stock should be bought from a long term view. Of course, I think the stock doing pretty well post its listing from 300 odd. The stock is now had jumped up to almost 1500 in just a matter of just about few months. So it's reinstated the fact that the stock is starting a long-term cyclical uptrend for itself. So even though after the five times rally for the stock, it still looks very attractive from a longer term basis. Now the second part of the question is that whether the viewer can look to buy at current levels. I would suggest to have a staggered approach over here. See, the stock was at 1530, 1540 just about a month out back, month and a half out back, and from there it's come back towards 1400 levels. So a 10% down from a previous swing high could be a good starting point for a stock like Happiest Mind, which has done exceptionally well, and then wait for maybe further legs of correction. So I think the next level of entry point for you could be around that 1280, 1300 mark. So at every 10% lower is where I believe that you can look to add maybe around 100 to 150 odd shares. And I think if the stock comes back to say 1200 odd levels, that could be the final retracement which you can look at. So don't wait for too long, because it's possible that the stock may go through time correction more rather than a price correction.
All right. In fact, the next question that I was going to take to Vijay was from Keyur, and he points out that he has bought Punjab National Bank for a price of 42 rupees, and he was looking at a lot of brokerages that had recommended a buy, and he was wondering why there was no upside. But like Vijay said, if you have a long-term horizon of as much as 5 years, this should be a good counter to hold on to. So I'm going to go to the next one, Vijay, since you've already answered this. Kunal, I'm coming to you in the next question. We've got Seema, who's asking about Tata Power, and she's bought a substantial number of shares, 2,500 at levels of 135, and she's wondering what the near-term prospects are. She says that it hasn't moved the way that she expected it to, and therefore she's wondering whether to sell, book a little loss, and move to something else.
I think you should stay invested, and I would sense that the stock is gearing up for a time-wise correction more rather than a price-wise correction. Now look, the stock had done phenomenally well last 5 quarters. The stock from being a 27 rupee stock had moved up to almost 137. So it's done exceptionally well in the last 5 quarters, giving returns of more than 4.5 odd x. From those March 2020 lows. So it's bound to be that these stocks consolidate for some more time. The kind of price momentum it tends to slow down a bit, and then you see the stock maturing into a strong uptrend. And look at it this way as well, that the stock Tata Power has not even broken its lifetime highs of 160 plus. So even though the last 5 quarters have been phenomenal, but I believe that the stock is still way beyond breaking above its lifetime high level. So I suggest that the viewers should wait on the stock and don't be in a hurry. I think the stock looks attractive for a breakout above 160 plus levels, and maybe even crossing above that 175 to 180 territory if you're a patient investor.
Okay, this one is coming from Sagar, and he wants a fundamental view on Trent. He's saying he's bought about 11,000 shares of the counter at 102 odd levels about 6 to 7 years ago. He wants to know that do you see a threat in the stock, Vijay, with the e-tailers, e-shopping company like Amazon, Myntra, also Ajio and Flipkart entering heavily or rather investing heavily in the fashion segment. How does Trent look from 100 odd levels? Right now it is trading upwards of 900 rupees per share. Does it make sense for Sagar to be worried of all these competitions that Trent is likely to see going ahead, or do you think they actually pose a threat to Trent going ahead?
Let me update you and the viewers that Tata's and TCS is working on the lines of a mega portal on the lines of Pinduoduo in China. So practically everything would be sold on this platform, which Tata's do, or maybe they have associations with other companies as well. So I think that this threat is definitely there, and the company understands it, and it's also a technology behemoth. So they have a very well integrated, backward and forward integrated business. So TCS is working on it, and it's let me tell you, it's a mega project. So probably in 2022 we'll see its launch as well. So Trent is going to be a beneficiary. Regarding the about keeping this stock, I think that the stock has run fantastically well. I think that it can go above 1,000 as well. But yes, again, as I've been mentioning 2-3 times earlier, that the price should be substantiated or should be supported by earnings, and I think that the price is quite high as of now. So it's a bit stretched, and I think that if somebody gets this stock around 800, 850, it would be a great buy. So yes, keep on booking profits around 1,000. Would be my call. You can exit.
All right. We've got another Tata Group company that is in focus. But before that, of course, Reliance Industries also apparently working for super apps. That may be something that we need to focus on, gentlemen, in the very near term. These companies transforming the space here in India with super apps. Let's talk about Sri Ramya's question from Bengaluru. Sri Ramya has written in. Tata Chemicals is the counter and bought at a level of 504. That's the average price. Wondering whether to add more at the current level. What would you say, Kunal?
Well, I think you should definitely hold. I think it's a brilliant stock, done exceptionally well. I remember a phase for Tata Chemicals where post results, I think it was the previous quarter, not this quarter, the previous quarter, where the stock was at 800 and then went to a sharp correction post results. After some disappointment, and then the stock made a very strong comeback for itself and back above that 800 plus levels very, very comfortably. In fact, the nature of the trend for these stocks is to try and look at every kind of correction as being more demand zones for the stock to try and consolidate. More buying happens into the stock at lower levels, and then you see an aggressive push for the stock where it moves up in a very short span of time to a new range altogether. So I think a very strong pattern emerging out for Tata Chemicals, and I think the stock could be looked at from longer term view. Since you've bought at lower levels, I believe you have a lot of buffer and cushion to hold on to the stock from a longer term view. I think the longer you hold, I would sense that the more stronger the upside potential is for Tata Chemicals.
Okay, this one is coming in from Boja Raja, and he's saying that he has 50 shares of Edelweiss Finance, which is purchased for 160 rupees per share. He wants to know what should he do for the longer term with this counter. Kunal, I come to you for this query. How does Edelweiss look on the charts for the medium term or to the long term? If someone is already invested, makes sense to stay put with it?
Just to stay put on it, because apparently what had happened, Cheryl, was that the last 3 months for Edelweiss was exceptional, because the stock moved up from 56 levels to almost at one point breaking about that 101 mark in the span of the last 3 months. This month somehow the stock had gone through a bit of a muted price action, retraced back from 100 levels to 80, 85, and this is a natural course of retracement which happens for stock prices which are gearing up for a momentum breakout. So purely based on the previous 3 months performance for Edelweiss from 56, 57 levels to almost 100 plus, and then a mild retracement, I think it's a good level where you can look to even average out further and try to bring your cost price as closer to 100, maybe 100, 110 odd levels. I think that would be a better strategy for you to hold on, because whenever the stock breaks out of that 100 mark, which is the previous swing high, it could lead up to a big breakout for the stock. So bullish on Edelweiss, and I think good level for you to average.
All right, gentlemen, I hate to say this, but we're into the last lap of this query segment. Please do keep your answers as short as we possibly can. We've got the next one coming in from Chaitanya, asking about ITC from the long-term perspective, and therefore I'm coming to you, Vijay, on this one. Clearly a counter that a lot of people are waiting for a breakout on. Would you suggest that this is a counter you can get into at the current level?
Well, yes, I think that we all have been waiting for the the demerger in the company. So if it does happen, the cigarette business gets separated from the paper, hotels and other business, I think that the stock would do well. So no harm at all in such volatile markets. It's a good buy.
All right, this one is coming in from Madhusudan, and he had written to us earlier as well. We took a view from Kunal, but Vijay, do you have a view on Power Grid Infrastructure Investment Trust, that is Power Grid InVIT? Madhusudan has 1200 shares which is purchased at 117 rupees per share. He wants to know whether he can add some more at current levels. Vijay, any view on Power Grid InVIT?
Yes, I think that added into Power Grid, I see with a longer term perspective, 5 to 7 years, this is a potential multi-bagger, great earnings, very low on the price to earnings, so it's substantiated by great earnings that have been iterating. So Power Grid and Power Grid InVIT both can be bought into with at least 5 years perspective, and anybody who buys into this stock, it's a great dividend yielding stock as well, Power Grid, so to say, and will make good money. Yeah.
Vijay, this is a question for you. We've got Mr. KV Rao, who's a senior citizen, who's a retired state government employee. He points out that he's gotten to TVs Srichakra in 2017, 125 shares bought at levels of 2,650, and he's yet to recover his buy price. What should he do?
I think that he should wait as of now and get out when he gets his price. There are other companies which have much larger footprint and much larger market. So I think that, if you want to be in the tire space, Apollo Tyres seemingly is fantastic. And TVS Srichakra was a backwardly integrated company, especially for TVS Motors. So I would say that, one can exit on highs and, shift to Apollo Tyres, or JK Tyre, which is a much better company.
This one is for Mayank and this one is for you, Kunal. He's holding about 2,000 shares of Federal Mogul, which he purchased at 300 rupees per share. He wants to know, can he add some more for the next 2 years?
Well, I would suggest wait for some more time. Maybe the stock is going through a downward trend. It's below its 200 as well as the 50-day moving average. The breakout apparently for the stock would be back above that 300 levels. So I would suggest that wait for some more time. Let the stock show you signals that it's ready for a breakout above 300 levels. Even if it comes back to your cost price, I think that would be a better level for you to average rather than at current levels, where the stock is still into a circumspect zone whether the downward trend would continue or not. So I would suggest to wait, and for the breakout above 300, it's where you should look to average further.
All right, Kunal, another one for you. Jay Krishnan is writing in from Kozhikode. He's asking about Ultratech Cement. What would be the entry price for the medium term?
I think the stock should be bought at current levels. In fact, Alex, the stock had corrected back from that 7,800 levels to 7,250, 7,300 in the last 1 month, and I think that would have been a perfect entry point because it retraced back towards almost touching its 50-day moving average. So I think that would be a better level for someone to who's looking to buy the stock, because when you buy a large cap trending stock, it's much better that you try and wait for the retracements or the mean reversion points specifically towards 50-day moving average. So should be bought at current levels, and assuming if the stock comes back towards 7,300, that should be an averaging point for you.
All right, this one is from Manohar. He wants to know about steel and iron ore companies, that's NMDC and SAIL. He's holding both of these counters, about 100 and 175 each, which he's purchased at around 171 for NMDC, and for SAIL 122 rupees per share. He wants to know whether he should continue to hold on to them for the longer term, or what should be his strategy. Vijay, what's your take on NMDC and SAIL?
Fantastic companies, dividend yielding companies, both have to be held on to, and I think that somebody who holds with 3 to 4 year perspective, we can see these stocks even doubling up in spite of being a public sector units. But they have great earnings. You have to understand this. They are they are doing great EPS, and any company which is having a wonderful EPS should do well with the medium to long term. So both are a hold.
Okay, Varun from Bengaluru, that answers your question on SAIL as well. Varun, by the way, had bought at levels of 25.5. Let's get into the rapid fire segment. Vijay, you'll be familiar with this. We try to take as many queries as possible over the span of 2 minutes, so the answer has to be very, very short. The first one, let's kick things off. Professor Thomas George from Ernakulam is asking about Bajaj Finance, bought at levels of 3,000. Should he hold on or should he sell? Kunal, over to you. Would you sell? Would you book profits?
Well, I'll recommend to definitely hold on to it for another 3 to 5 years.
This one is from Chaitanya. This one is for you, Kunal, as well. View on Rupa. He's already bought at 518 rupees per share levels. Buy, sell, rather hold, sell or average?
You should look to average. Closer to 400 is where the support is. So I would recommend an average at 400 levels.
Vijay, this one's for you. Parthasarthi holding 300 shares of ONGC, level is 147. Would you continue to hold?
Well, I think that once he gets his price, it should shift to either GAIL or metal companies, as I mentioned, or banks also, which I mentioned.
Dikshita is asking whether she can buy Hindustan Copper at current levels. Should she adopt a buy on dip strategy, Kunal?
So I think it's a good level. The stock retraced back towards 200 moving average. So should be a good starting point for you to buy Hindustan Copper.
Kunal, I think I know the answer to this, but I'm still asking. Suresh from Bengaluru is asking about Naukri, or rather InfoEdge at the current level. Would you hold or book profits? Bought at level of 3850.
You should definitely hold it for another 3 to 5 years at least.
Okay, this is from Raghunathan. He's holding SBI at the levels of 339 rupees per share. What should he do? Continue to hold on to it? What's your take, Vijay?
Well, yes, I think that he should hold on to. It's a good, great public sector bank, the largest, and he should definitely hold on. I see 500 levels on this.
Okay, I believe Sudhanshu is asking about TCS. We've already taken Infi, but Kunal, what's the view about entry price for TCS?
I would suggest a wait and wait for corrections to at least 3400, 3450 for TCS.
With that, we come to the end of the rapid fire as well as the query segment. Thank you, Kunal, as well as Vijay, for joining us on Buy Now Sell. And for all the viewers whose queries we could not accommodate today, please be patient. We will make sure that we will take them tomorrow. And on that note, we'll slip into a break in this edition of Buy Now Sell Now. But stay tuned, more on the other side, so don't go anywhere.